Troy, I like the ceiling. Is that in your house? Is that real?
Yeah, that's my house. It's yeah, we moved here about 4 years ago because I really enjoyed the openness of the house. I had a house down in Costa Rica with a bunch of looking over the jungle. So when I saw this house, it had the big ceiling and then had a big backyard with a lot of vegetation. I said, well, it's kind of Costa Rica here in Texas.
Sure, why not? Was the Costa Rica one also yours?
Yeah, I had a house down there that we used to go down to. We had it for about 7 years.
And Troy, where are you in Texas? Because we're in Austin here, obviously. I'm sure you're
I'm
near
right on the north corridor, north of Dallas, near the Allen McKinney.
Okay.
Hot
Awesome.
pockets, literally.
We got just north to be out of Dallas County where they have the lockdown. Collin County's pretty wide open and pretty lax on the COVID. So we enjoy being up here where we have a little more freedom.
Yeah. It's a lot of outside here, at least in Texas. So we get to kind of do a little bit more than they want in my hometown of Chicago. So everyone gathering in here, we're going to get started in just 1 or 2 minutes here. We appreciate you stopping in for the webinar. We're going to have a really great one. You can feel free to put in the, let's see, we have an open chat. I didn't know we do. You know, feel free in the open chat to just say, sound off where you guys are tuning in from. And Alina and Ekaterina, where are you two from before we get started here? Where are you tuning in from?
I'm in New York, Bronx, New York.
Yeah.
And I'm New Jersey, right next to Ekaterina.
Have you two been around the city for the whole time, or have you two taken a little vacation somewhere else?
We're just in the city the whole time. I'm still in the city, probably 3 times a week.
Everyone I know went to Long Island or somewhere else, but
well, I went as far as Bronx.
We have some people tuning in from Virginia, Denver, Houston, my hometown, Texas here. All right, we'll get started in 1 more minute, everyone. All right, and I'm going to, recording is started, so thank you, Tyler. Okay, so we're here. I'm Brendan Walsh from Rocket Dollar. Welcome, everyone. What we're really trying to do today is get a couple different alternative investment experts. A lot of customers that come to Rocket Dollar who have experience, you know, with the people that we're going to talk to here today, you know, maybe they've never done an alternative investment before. Maybe it's something they've just heard about from friends. Maybe they're very interested in diversifying from their portfolio. However, they don't really know what alternative markets to approach and go to. So we're really going to try and explore some of their expertise today. We're going to talk about some of their stories. So you can get a feel for not only their alternative markets, but also, you know, how might that serve you? How to think differently than a stocks and bonds portfolio? How's that going to serve your current portfolio? So at Rocket Dollar, I do our business and sales operations here. You obviously, if you're a Rocket Dollar customer, you might have heard me on the phone or from some of our webinars before. And I help make sure customers get into a self-directed IRA or 401k and get acquainted, and later on also get into their investment. So we're going to do introductions here. Troy, you want to introduce yourself?
Sure. Welcome, everyone. I appreciate you all coming out tonight and participating. I know time is important. I'm Troy Eckard. I'm the CEO and manager of a company called Eckard Enterprises. It's a family-run business that mainly focuses on alternative investments in the oil and gas industry. We own pipelines, oil and gas exploration, mineral rights, fabrication, and essentially I've been doing it since 1985, and it is a family-run business here in North Dallas. And we mainly work with private investors as far as direct ownership in oil and gas investments.
Okay, great. Thank you, Troy. Alina, want to introduce yourself?
Thank you, Brendan. Hello, everyone. My name is Alina Trigub. I run the company called SAMO Financial. It's a boutique private equity firm specializing in alternative investments. Our main focus has been, for the most part, multifamily, but we've been also exploring and investing in mobile home parks and storages. We specialize on providing investor education and explaining to investors how they can invest by using not only regular cash accounts, but also using self-directed accounts such as Rocket Dollar. We also offer education on various alternative assets and we're helping investors in general get acclimated with the alternative investments process and help them to build a well-diversified portfolio that not only includes Wall Street investments, but also a number of alternatives directly in the alternative space, completely outside of Wall Street.
Okay, awesome. And thank you. And Ekaterina.
Yeah. Well, thank you very much. And thank you everyone for coming. Excited to share the asset class that I'm so passionate about. It's a mobile home park class, and my team, M2K Partners, we are value add investors in mobile home parks across United States. We own and operate parks in various states, and we normally would invest with pretty much same people over and over. I guess this is, we are value investors, not only in the parks, but also in relationships. So that is our goal. And me personally, as mobile home park investing is also my passion. I'm sharing my knowledge and experience that I gained so far with the mobile home tribe community that is also on Facebook and just on meetups, and happy to share information with you guys and see if mobile home park investing may be something that you would consider as well.
Great. Thank you, Ekaterina. And just something, as you'll see with all these alternative markets, there is really a niche and a community in each one of these different markets. And as Ekaterina is talking about, the mobile home park community, everyone talks to each other, they do deals together, they network together. And that's what I think you'll really find as you look into these alternative markets, whether it's energy, real estate, private equity, a certain type of real estate. There's so many different subtypes. Really just introduce yourself, start a conversation, whether it's with the people here today or other people that invest in this space. Usually people are willing to help out, keep, bringing extra capital and bringing people into certain deals. The more people you know, that's going to help you be a more competent investor. And also be on the hunt for deals, which are maybe sometimes, they're not blasted out like the New York Stock Exchange, like a big flashy IPO. Sometimes they're a bit harder to find. You got to do a bit of networking to find the great stuff there. So first, we've talked just a little bit surface level about people's, the panelists here, their companies and their backgrounds. I'd love for them to go, everyone here to go more into depth to an individual story of success. How are you able to kind of achieve a really great moment at your company in your current industry? With all your experience that you've had in this alternative market, can you tell me about one moment and how it's kind of helped and shaped your experience here today? So Alina, I'll have you go first.
Sure. Thank you, Brandon. For me, it kind of happened when I earned my degree in accounting, which was ages ago. And while I started my career as a tax accountant, I never really enjoyed that and ran away from taxes and accounting altogether into the information technology. And while I was working in another space, I kept thinking about taxes because my own and my husband's career were progressing. So as were our tax brackets. And I kept thinking that I need to find a way to lower our taxes. It's just, it was crazy. And not only paying regular taxes, but paying the AMT, alternative minimum tax. And so real estate kept coming up. And I finally decided to take action about 7 years ago and started doing research in real estate to see what kind of real estate investing I can start. So after many months of research, I decided to start investing in real estate through syndication. So I found syndications and became an equity partner in one, then another, and then one more, and then the trickle down effect happened. And after doing that for a number of years, and after speaking with a lot of my friends, colleagues, being in New York, New Jersey area, I'm surrounded by a lot of Wall Street professionals, a lot of IT professionals. And after talking to them and realizing that almost none of them have heard the word syndication, I decided that I needed to change that. I had to help other people essentially follow my footsteps and start building their portfolio and their passive income outside the Wall Street, because you can't survive on the volatility of the stock market. I mean, we see what happened March of last year. Something bound to happen probably in the next couple of years. Who knows how soon? But there should be a way to balance it out and have a well-diversified portfolio, and alternatives is the way to go. And while the main representation of my portfolio has been in the past multifamily, I strongly believe that diversification is the key. So everyone has to invest in a number of assets, whether it's apartments or other alternatives. So with that goal in mind, I started my own company, SAMO Financial, because I wanted to help other people to achieve that well-balanced portfolio and have diversification and be able to have access to those alternative investments and start investing. And we've been growing ever since. And I'm really grateful, that Eureka came to me, that I decided to start helping other people, because it feels rewarding when I know that I'm helping other people essentially achieve that financial independence and build wealth for themselves and their families, and they're able to follow my lead.
Okay, thank you, Alina. And I think something that Alina mentioned there, just there's very accomplished people on Wall Street. They've been probably trading stocks and bonds and maybe options. There's lots of different things that they could be doing. However, they might have never done an alt deal before, and I find that very frequent. As I'll get a call from someone on the phone here, is they've been investing for many years. Maybe they've been doing a little bit of stuff and dabbling in real estate. Maybe they've never done something in an alt deal, or they've never done it in a retirement account before. So there's just make sure you talk to your friends that if someone's giving you an investing tip helps you. Return the favor. Go talk to them about alternatives. See if you can spread the word. See what your friends like to invest in. Because the better you understand something, the better you network, you can better communicate that to your own portfolio and others. So thank you, Lena. Troy, we'll have you talk next on what your great success story is.
Yeah, I don't know. I've got a lot of them, Brendan, but I think the mother of all inventions is failure. And so it seems like when you have a setback is when you learn the greatest lessons. But I think the number one thing that changed my career is I started off as an investment broker as a young kid, working for a licensed firm specializing in raising capital for oil and gas exploration. And I approached a CFO of a company. He was one of my clients, and he and his CEO had just sold their business for about $1 billion to Campbell's Soup, paste pecani sauce. Y'all may know the pecani sauce. And he was looking at me in the eyes one day. He's about 6'4", and he said, Troy, you're never going to learn how to make investments successfully if you don't put your own money at risk alongside your partners. He said, if you'll invest in this project, I'll invest with you. And I was young. I was probably 22 or 23. And I said, well, I don't have your kind of money to invest. And he said, I don't care if you put $1 in. I just want you to know the process of the investments in the alternative space that you're asking your clients to, because then it tells me you are committed to that sector. So I started making investments at 23 in the oil and gas industry. And 4 years later, I own my own firm, and I've had my own oil and gas company now for 35 years. So the one thing I would say as far as a key pivotal moment in my career is making the decision that I was going to make alternative investments my career. It's not a job. It's not a product. It's not a fad. It's what I do. And because of that, I've got 35 years of experience developing and building that type of knowledge and expertise. So whether it's mobile home parks, whether it's private equity, I pretty much have been all over the space with my own money investing in multiple assets in addition to my own energy. So it's really been something I think the investors out there listening, and I think our guests will agree, alternative investment is a core asset you must have in your portfolio, but you must be committed to it, because if you're not, you're never really going to be successful at it. I'll pass the mic back to you, Brendan.
Yeah, great. Thank you, Troy. I think something you mentioned is, people that find a certain deal and they get better at it and better at it, they start small, but if they can quickly repeat that process, that's something you can continue to do all the way into retirement. As you make more connections, you can get better access to different deal flow. And, we all might have seen it on LinkedIn. as soon as another investment trend pops up or something, someone's changing their LinkedIn term and they're chasing after that. And then all of a sudden, then 2 years later, they're chasing after that. In alts, it really helps to specialize. Start and dabble, figure out what's interesting to you. And if you continue to specialize, often all those connections, everything builds on each other. Awesome.
Right.
Thank you, Troy. Ekaterina.
Yeah, Brendan, yeah, dabbling here and there and testing waters. That's absolutely how I found my way in mobile home park investing. So I started, as most of real estate investors, probably in single family space. So I was trying to figure out what would be my entry point, because I was really fascinated from early on with this opportunity of investing and getting cash flow from a property that sounded absolutely magical. So for me, once I immigrated to United States, which was 14 years ago, and as soon as I got a job and had 2 years of W-2, and I was able to even apply for any type of loan. I figured, okay, so what could I do? What would allow me to enter with a low amount? And I found a turnkey investment in out of state. I'm in New York, so I had to go out of state. And now I say it luckily, but I was pretty stressed at the time when I had 2 evictions in the course of just 6 months. So that quickly taught me that I have to go a safer route. And the safer route for me was go commercial. Commercial what? I looked at multifamily, so expensive. People are sounding so highbrow, super professional, very not very accessible to me, and I didn't know at that time anyone who would really teach me the ropes. And then the more I was listening to various podcasts about mobile home park investing, the more I could relate to those folks. And then, of course, the barrier of entry, the price point for mobile home community is much more lower. So I thought, you know what, with my background in marketing and advertising, this is actually what I was doing for over a decade, starting back in Russia, where I'm from. I thought, you know what, one thing I could do is I could do marketing. So let me go and market to mobile home park owners and see if they would sell their communities to me. So I started doing that, and that's how I found first couple of deals. I was pretty much started myself. I had a mentor who, because I was just, bugging him too much. So he said, okay, I'll show you how it's done. So we actually ended up wholesaling first couple of deals, didn't buy them, didn't look solid enough. And then got my first partner, and then we purchased a park, our first park. And I think from there, it really started building up, because you buy right, it has to be a solid investment, and then you could really build on top of it. So you have to have a solid foundation. And I think once you have your first result, when you can actually show your numbers, show how you do business, I think that that is a great indicator, not only to yourself and your confidence, but also to others who are operators around you or potential investors. So I think that was just a pivotal moment of picking this asset class and just really committing to it, because for a very long time, for close to a year, as I was marketing directly to owners, there was not much to show for. So you have to just really commit to it and pick what feels right to you, what you really feel connection to, and just commit to that.
Great, thank you, Ekaterina. And Ekaterina's, she mentioned a lot about that investment community. Finding the investment community that fits with you. And as you're doing your first deal, again, start small. Maybe work with an expert, work with a mentor, and always just ask. Don't be afraid to ask. There will be investment minimums, and some people think all investment areas are very closed off and exclusive. However, you just don't know. There might be an investor that's very willing to take you on at something below what they have their minimum investment level, just because they want to work with you, start a relationship. And opening those doors really opens you up to new opportunities, as Ekaterina is talking about, to work hard, to work with mentors, to prove yourself, whether you're an investor or you're building kind of an own enterprise of your own. Awesome. Thank you all, three of you. Great stories. So want to make sure we shift and build up the differences between stocks and bond investing and alternative investing. There's some people that consider themselves just a stocks and bond investor, and then there's other people that are all in alts. Investing in the stock market, that's seen as more traditional, in our current world. It's safer, it's more popular route. Even though there's people kind of playing options, and people throwing stuff into random Robinhood companies they don't know the name of, some people have this feeling that alternatives can be riskier or unknown. So I'd like to ask everyone, what are your thoughts? And also from the rocket dollar perspective, we get two types of alts people. Usually they're looking for some pop, or they're looking for some more steady yield. So first, how do you feel, compared to stocks and bonds? How risky is your asset? And then, what are your investors typically looking for? What are they asking for when they come to you? So Alina, we'll have you go first.
Sounds good. Thank you, Brandon. I want to pick on something that you mentioned while asking the question. You said typically investors, and I don't remember the exact word, but you said some to the extent that typically investors avoid alternatives because of the unknown, and that's exactly the point. I think many people are afraid of the alternatives because the space is completely unknown to them, and that essentially is because Wall Street is advertising everywhere stocks, bonds, mutual funds, and now ETFs. So obviously everyone is familiar with that because, well, guess what? When I graduated from college and went to work at my first job at Ernst & Young, the first thing that, or one of the things I was offered is 401k. In Wall Street, it was mutual funds. Well, guess what? I changed jobs. I went from public company to private. What I was offered as one of the benefits? 401k and mutual funds again. I mean, nobody ever mentions alternatives anywhere because Wall Street just puts a lot of money into advertising, whether it's through employers or on billboards or anywhere else. And alternatives, because of the SEC regulations, tend to be a lot stricter, a lot more private. And thanks to the crowdfunding platform, some of it has been coming out in the last few years. But say, 10, 15 years ago, this was completely under the table. It wasn't known. It wasn't highly publicized. And people had no idea what it meant. Not that they know now, but at least there are more people talking about alternatives, syndications, private equity, and so forth these days. So what I would say to folks that would like to explore alternatives, first step is to educate themselves, and a panel like this one is a perfect opportunity to hear about other alternatives. The next step would be to pick up some books, start listening to podcasts, and start talking to people that are actively investing in the space, and start asking them about their experiences, and read up more, read articles, read books, and just understand how alternatives works. And another point that I want to bring across is when looking at alternatives versus Wall Street investment, when it comes to comparing volatility, I typically like to pick on Starbucks stocks just because I enjoy drinking coffee. And what I would say, Brandon, that if all four of us start drinking 5 cups a day of Starbucks coffee every day, do you think Starbucks stock price will start going up? Of course not. It has no correlation, whether we drink 5 cups, 10 cups, or no cups of Starbucks coffee. That has no correlation of how Starbucks stock will behave. In real estate, everything is based on a predictable calculations. And what I mean by that, as a former tax accountant, I like to deal with numbers. So when we buy a property, we ask seller to provide us with financials. So we either get financials for 1 year, for 2 years, or whatever we can obtain from the seller. But essentially, we take financial statements, let's say income statement, and we project into the future how this particular building will act in this particular location based on what the demographics and what the area in this specific location projects in terms of rents, in terms of property management increases, in terms of expenses, and so forth. So everything is projected, everything is based on calculations. Where on Wall Street can we get this sort of estimation? It's non-existent. And that's essentially my answer or on how Wall Street compares to the alternatives.
Right.
Thank you, Brandon.
Thank you, Elena. And I think there is such as people always ask, where's my statement? Where can I log in and see the value of my asset? And that is such a constant question. And you just kind of have to take a step back and think, the information is still there. It is still out there. It might not be in the most accessible online panel that you're used to. Stocks and bonds have very great technology, and they have all this access, and you can look up your Starbucks stock and your Facebook stock. But real estate, there's lots of numbers, projections that you can look at. There's how much money renters are bringing in. A lot of alts markets are also a lot more attached to the reality of the actual asset of what is going on. We've seen some crazy valuations this year. Many stock investors have been very happy, but people have constantly said, why does this make any sense? My travel stock is killing it this year in Priceline, and travel is basically dead. Doesn't make any sense. So something like real estate, energy, and these alternative assets, they're much more attached to financial gravity. And that's why we have a lot of investors come in and saying, hey, I'm going to diversify from some of my stocks and bonds to attach to markets I know will move separately, depending when the market moves up or takes a dive. So I'm not all in one basket. All right. Thank you, Alina. Ekaterina, we'll have you next.
Yeah, sure. Well, Brendan, happy to share. I think mobile home parks, they've been covered quite a bit in the past year or so, maybe a few years. It's become really hot, really talked about the asset class. And investors, they can read up, and the benefits of mobile home park investing are rather known right now. It's definitely high yields. When multifamily, let's say, investments, we know they're trading at really low cap rates. We're still finding in this market today, finding 8 cap, 9 cap investments, and that is virtually unheard of anywhere else. It's a great hedge against economic decline, talking about virus that is going on right now. So America really gets poorer, and where else people would go after mobile home parks as the only form of housing devoted to this demographic class is the most affordable niche of real estate. Mobile home parks are have very strict barrier of entry, so there are barely any mobile home parks built in the United States, and hundreds are being demoed every single year. And of course, as investors may have heard, and this is a quite popular thing, so to mention about parks and about homes in those parks, that the cost of moving the home out of the park is extremely expensive to the resident who lives in the park. For example, the cost of moving the house out of the park from the lot where it is, it could be upwards of $5,000. And for a family that lives in the park with a lot rent of maybe $350 a month, this is almost incredible amount of cash that they could not possibly put together. So that is why you normally don't see homes moving out of the parks. So once you have your residents, they pretty much stay there. And as you may understand, the demand is growing daily, and we know that 20% of US population lives in mobile home park communities. So that is something to say for that. And as you know, as Alina was mentioning about taxes, I just wanted to mention that in mobile home park communities, why they are also being popular among investors, passive investors alike, is accelerated depreciation, because you can depreciate a utility, lines, roads, and you can often allocate 50 to 75% of the total purchase price for tax purposes. And you can depreciate them over 15 years versus 27 and a half. And commercial is 39 years. So these are just quick facts. And I know Alina also mentioned, and I think, Brendan, you were also talking about who you invest with. Learn, asset class may be very attractive and sounding also good, but who you invest with is critical, is absolutely essential, because it may sound all great, but execution is the key. So finding the right deal, purchasing and operating it the right way is absolutely the key. So community and events like this, when you get in to meet people and getting to hear more, this is definitely a huge advantage and benefit.
Great, thank you, Ekaterina. And something that Ekaterina is mentioning is just, trust who you're investing with. Make sure you network, check for references every time you invest with somebody. And so the stocks and bond space, there's just so much regulation all over the place. In 401ks, there's so much regulation that HR and CEOs, they're very afraid to ever put something ever in something like a 401k. An advisor at a big shop is just afraid to put something in a 401k. It doesn't mean there aren't great investments. There's great investments all over the place. It's just with this regulation, with alternative markets, if you're in a very unknown part of the market, make sure you're talking to people, getting a reference. Talk to some previous investors. Ask to talk to some previous investors of that fund. And it's, the one or two bad experiences of somebody that has a horrible experience that really ruins it for the rest of us. And that's why you just need to actually check. Look at someone in the alts market. Know what you're doing. Make sure you know your investment and who you're talking to. And I think that personal networking aspect, that's something in the alts market you just need to keep your head in a swivel and you need to be aware of, because that's where the good deals come from. But that's where if people aren't careful, that's sometimes where someone runs into an issue where someone's just not being honest or upfront with their investment. And that experience in that network, that helps rip that concern away, really trusting who you're investing with and who you're communicating with. All right, thank you, Ekaterina. Troy, I'd love to hear a comparison to energy compared to the stock market. We talked a lot of good stuff about this last week, but I'd love to hear some of it again.
Well, let me make a couple of key points. One is I owned a licensed investment firm for about 20 years. So I'm very, very aware of the required due diligence and registration and filings and certifications. And I also remember guys like Madoff, who stole $16 billion out of the public market. So I've got personal experiences from investing in public stocks where the CEOs were liars and crooks and they got delisted. I can probably mention 10 companies I had zero basis in my stocks after it turned out there was fraud, et cetera. So fraud and failure exist across the board. So the number one thing I would tell any investor is whether you're investing in public equities or alternative investments, it's due diligence. And it is incumbent upon you as the investor to use your common sense. The number one factor I find in investor failure is they invest with emotions and not facts. And so reality is that the alternative investment space is an outstanding area to invest in, but it's not for lazy investors. Lazy investors want to just pick up a paper, swipe their app, buy some stock. I can tell you right now, I haven't heard the word PE ratio in 5 years. Nobody could tell you what a stock's worth or what it's trading. It's, hey, Johnny, so-and-so is going up, buy it, I'm up 2%, 5%. Well, any idiot can make 30% in the market that's going up 60%, right? So the number one thing is due diligence. The second thing is transparency. The biggest difficulty alternative investments is that you have limited access to data. So if I were to talk about buying into a mobile home park, I would say, Ekaterina, what I'd like to know is, what'd you pay for it? When did you get it? How many tenants are there? What's the background of the tenants? You're gonna say, I don't have all that information because we bought it based on our expertise and I can only share with you what I know. Well, what if you don't know a lot or you didn't do a lot of background? I now take the risk of that sponsor not doing enough background. So in my industry, the oil and gas industry is probably one of the nastiest industries there is. I'd say 9.5 out of 10 people in my business are crooks, liars, cheats, and thieves. And so the problem is an investor who wants to get into direct ownership in energy has to decide, well, how do I get in and not get taken to the cleaners by bad people that don't know it? It's transparency. So the third aspect is that I think the investors themselves, in a lot of ways, have to blame themselves, because when you talk about private equity investments, multifamily with Alina, you talk about mobile home parks with Ekaterina, you talk to me about energy, you have to truly engage and you have to listen to the answers and you've got to use common sense. But the same thing applies to public stocks. Here's the difference between, I think, my business and public stock. Exxon goes out and they're half a $1 trillion company. Oil prices dropped last year. They dropped to 199 billion. They lose over half their value. On top of that, so my stock price goes down. On top of that, I've also bought their stock as they're kicking out a dividend of 3.6%. Now they're talking possibly about suspending their dividends. So I get a double whammy. I get a reduction in my investment basis. I get a loss. I don't maybe get my dividend suspended. But if I were a direct owner of those oil and gas rights, like mineral rights, where I own the actual physical alternative investment asset in my hand, I don't care what happens to Exxon stock. I want to get 97% of the revenue, not the 3.6% Exxon gives me. The problem is if you put 1,000 millionaires in a room and you talked about mobile home parks, or you talked about multifamily, or you talked about energy, 950 will leave the room. 50 of these millionaires will stay there to listen to facts because they're lazy, because, oh, I'm really good at buying stuff. I've met more geniuses in the last year who claim they can make 30% in the stock market and they make 10% standing on their head. But if you were to ask that same individual what happened to them last March, they forgot about losing 40%, or you talked to them in 2008. So my answer to your question is there is a proper place in all portfolios for alternative investments, but the bulk of investors will invest in the public equities because that's what's accepted, because it's less lawsuits, it's more transparent, it is more liquid. The illiquidity in alternative investments, to me, is the number one deterrent from investors getting in alternative investments. They don't have the liquidity. If there were a better liquidity, you'd have 10 times as many investors investing in alternative investments. That's my personal view after 35 years of doing this.
All right, thank you, Troy. Yeah, and just that accessibility, look for data, ask for data, especially if you don't feel comfortable with how much data you're getting, ask for more of it. Engage with your investment sponsor, the issuer, especially with these smaller firms. You can demand there, if you're a top investor, you can start throwing your weight around and saying, you need to be more transparent. I need to see the site. Take me for a tour. Obviously, we're at COVID time, but you can be more involved with your investment, and that helps you be more successful.
This is a side note, Brendan, you're absolutely right, because one of the things we encourage, and I think Ekaterina and Alina would be the same way, we get very sophisticated investors. I mean, you're really a sophisticated investor once you start moving into alternative investments, and they're engineers or they're bankers or they're lawyers, and they say, I'd like to come to your office and look at your records. Come on, what do you want to see? So it is really as you said, Brendan, it's a ask and you should receive. If you ask and don't receive, you should leave. That's the way it should work, right?
Look for the information. Like, for example, I invested in a self-storage unit. This is one of my first alt deals I ever did. It was new to me. However, one of my coworkers, advisor of the company, Dan, he's just ranting about self-storage all day long. But one of the first things I did, didn't end up happening because of COVID, was when I invested, I said, hey, this self-storage unit right north of Austin, it's a hot area. I want to go see it. I don't know, I stored my crap in a storage unit before, but just simple of walking around, I don't really know anything else about it. So visiting the location, seeing it physically, just being silent as they, did inspections with the current owners they're buying the place from, just osmosising that in. knowing they're competent. They've sold, they've operated 20 or 30 self-storage units across Texas, osmosising in their expertise, but helps me feel more comfortable with my investment. I asked them to spit out 5 or 6 other Texas storage units and then some other ones outside the state that they had done well with, just to see how those turned out. What's the deal that went bad? Why did it go bad? Something went wrong. The investment wasn't getting done yet. Just tell me why. I want to know. So ask questions, continue to be involved. And that's what Troy is saying. If you want to sit back and be a passive investor, you're going to need to pick a much more simpler alt or simpler expectations. And that's
Right.
what people in stocks and bonds are looking for, a very laid back experience. So for your first one, start small and you can continue to get more involved. Awesome. Thank you, everyone. So I'd love for you all to explain, in your niche, how do you create value for your clients? Especially, with a portfolio, how do you create a safe approach to investing in alternatives, especially during these uncertain times? We've experienced great times in the stock market, but I constantly get people calling about their portfolios, want to diversify some of that away if we see some movement in these crazy stock valuations. So Troy, I'd love if you'd start first.
Well, as I was told when I was a young investment advisor or broker, I had a lot of older clients say, son, I'll invest with you when you have a lot more scars from failing. And so the number one thing I would lean on is that in my case is you can't replace 35 years of expertise in the same space. And then it goes to the second part, which is what that really big CFO 6'5" guy told me back when I was a kid. He said, invest with your own money. So in my case, we mainly focus on oil and gas minerals, as you know, Brendan. And so what I decided is that in order for me to invite my partners to invest in my product, I'm going to go buy all the minerals myself, take care of all the due diligence. And once I know that they're bought, acquired, deeded, and recorded, then I'll offer some of those mineral rights to my qualified clients. So I lean heavily on the idea that you cannot replace expertise. So I'm going to digress to a self-storage story to make you laugh. So one of my clients used to invest me in oil and gas, and he decided he was going to do his own self-storage unit, and he was going to syndicate it, Alina. He was going to ask some people, hey, let's all invest because I'm a smart guy and I'm a successful guy and I'm doing this. So he builds this self-storage unit, Brendan, and he goes out there with several of his clients and he gets out to the site and he sees this fire hydrant, but it's about 4 foot in the air. He's like, I have no idea why the fire hydrant is 4 foot in the air, because the guy reading the plans forgot to put in the fill and his property was 4 feet below flood level and the fire hydrant was where it was supposed to be. Every single unit flooded or had to be completely torn down and rebuilt.
Oh my God.
That goes back to, it looked great, it looked beautiful, but that fire hydrant clearly showed you had an absolute disaster. So the investors invested without experience, and as a result, the project failed. It's not that he didn't build it, it's not that he didn't pay for it, it's not that he didn't design it, he didn't know right from wrong. In my early part of my career, I had failures as a result of not knowing what I didn't know. So one of the things I can say that's really important is you must lean heavily on expertise in a particular area. Sometimes I'll look at a resume of somebody that's a sponsor, and the last 3 years they've been doing self-storage, and before that they ran a Whataburger or a Chick-fil-A, and you're like, what does that have to do with self-storage? Mm-hmm. It's not that bright people can't do bright new things, but there is an inherent additional risk with that. So one of the things I would suggest to our listeners is let your common sense rule, and what you want to do is ask those basic questions. How did you get in the space? What did you fail at? That's the number one question you should ask. Tell me how you failed. What did you do wrong and how did you learn from that? Because we all fail. If you can see that they can admit to a failure and they can compound their success by eliminating that failure, you're going to do really, really well. And what you said earlier is exactly what one of my bigger partners said. He said, when I started buying minerals heavy about 2 years ago, he said, what you buy today looks good, will look like D- grade product by the time you're in this for a couple of years. He's absolutely right. What we're buying today is 5 times better. So I don't know if I answered your question exactly the way you wanted, but I wanted to make sure you knew that in my view, you cannot replace experience, expertise, and just direct involvement by the sponsor in their own investments, because when you have your skin in the game, you pay a lot more attention than when you don't.
Mm-hmm. Awesome. Thank you, Troy. And we had a question pop in that's really related to you. So I'll just ask it quick. do mineral companies do annual reports or do some kind of statements on the assets and what you've got?
I'll be honest. I don't know of anybody that does business the way we do it. Be a candidate. There's 2 or 3 publicly traded mineral companies, and there are a few out there that are doing minerals. Our company does provide an annual report, which we just prepared, is going out to all of our investors, and it shows their own individual portfolio and annual report. But I would say the majority of most companies never intend on doing an annual report because they never intend on trying to be accountable for the results. Now that's kind of sarcastic, but I have yet in my career seen a mineral company with private investors in the alternative space ever provide an annual report. Our company does.
Yeah, and that's something in the alt space, expecting a statement daily in the alt space, it's just not going to happen in most assets. Just can't happen. Maybe like crypto and Bitcoin, but that have live markets.
An annual report, Brendan.
Yeah, most things. Look, you should be expecting something quarterly, two times a year, or 1 time a year. And in that other time, that's when you need to be asking questions, asking how things are going. And then at the end of the year, you need to really ask expectations and looking for those reports and look at last year's report, see how they did to their promises, their projections, what went wrong, what's going on, and did anything change in the projection?
Exactly.
Okay. So Alina, I'd love to hear how you provide value for your clients.
Thank you, Brandon. So I want to add to something that Troy said in terms of the experience. I think track record of the sponsor is absolutely essential. If someone, especially if someone has gone through prior recessions and know how to go through what we're going through right now and has that experience, it makes their investment choices and their strategy so much stronger. But on top of it, what's also essential is having a full transparency. When a deal sponsor is not fully transparent, and let's say disaster, as Troy mentioned, with that self-storage happened, the units got flooded. If they didn't mention that to their investors up front, shame on them, because what's going to happen later, they may get into a lot of debt, or they may not be able to pay dividends or something else. Problems like this have to be shared with investors up front. Be fully transparent and explain what has happened, how it happened, and on top of it, be prepared to share how you plan to go about this obstacle and mitigate any future risks that may come up. Because we're all humans, we all make mistakes. We obviously don't want investors to pay for our mistakes. We want to pay for our own mistakes. But nevertheless, if mistakes are happening, you have to share it with investors what's going on and how you cleaning those mistakes. And in terms of challenges that we're all going through right now with the pandemic, we've tried to bring to our investors as much education about the current state of the affairs, about the economy, about how the assets are operating in general. We actually host a monthly meetup where we bring various guests that can share their experiences. We had a number of guests talk about prior recessions and how they handled their apartment complexes, what strategies they've implemented to get through the recessions. And some of the things that we typically do, and other operators mentioned, if we are nearing recession or if we are in a recession, the best way to go, at least in multifamily space, is to underwrite the asset for a longer term. Instead of doing it for 3 to 5 years, let's underwrite it for 7 to 10 years. Let's plan for longer term. Let's get a longer loan terms and potentially have something that's interest only for a longer duration, so we can continue operating and have fewer expenses and be upfront with the investors. Potentially, we may not be able to pay dividends in the first year or year and a half while we are renovating the property, because renovating the property and bringing value to the property takes time, resources, and money. And when you're going through the recession, it may potentially take longer. So it's always better to under promise and over deliver at the end, but not to promise some that you're going to deliver outstanding returns without knowing what's up ahead of you, especially in the times like today. So for us, it's been fully transparent. It's leveraging technology, and these days it's very easy. There are plenty of tools available to manage investors and to communicate with investors and to share the information and with the investors through these tools. So we've been using that as well, and just educating them on everything that surrounds multifamily and alternative space in general. Thank you.
Your mic's off, Brendan.
Thank you, Linnea. Thank you, Troy. Something about that Alina mentioned about is back testing, checking during times of stress. So everyone uses 2008 for both stocks and bonds and real estate. So you'll typically hear stocks and bonds managers talk about back testing during 2001 and the tech bubble burst, .com burst, 2008 when the real estate markets burst. What did eviction rates look like? What if a certain amount of your assets defaults? What's going to happen? So you should talk to that alternative investment that manager. What hard times have they gone through? Or maybe they are a newer manager. Maybe they were in those hard times in another job. What were they doing at that time? If they have a current model that has not been tested during a recession, sometimes you have great investments. They're just younger managers. Like Troy is talking in his younger days, he has to work and they have to cut their teeth. You have to see how are they prepared to weather those times. It's very easy to make money when everything's just going up in green. A lot of investors as they get older constantly think, how do I avoid losing dollars? Ekaterina, would love to hear how you're creating value for your investors.
Yeah, Brendan, that's cutting teeth of being a young investor. I think that's exactly about my team here. Have not been around for long enough to weather 2008 recession with our mobile home park investing business. And that is why I think the only responsible way, and that's how we choose to do it, we just take it slow. And we do just go slow. We don't want to be owning the most units. We want to be owning the most profitable units. So Alina saw my deals, and one of the things that I just also Troy mentioned, show me your failure, way you failed, and tell me what you learned from it. I think that is absolutely critical. And talking about things that how we bring value to our investors. First of all, we one of the critical points, I think, for our young team was when we were focusing on value adds. And at some point we decided, hell, this is a great opportunity. Let us purchase a turnkey investment, which is absolutely not what we do. So we learned pretty quickly, and we did lose some our own money, no one else's money. We learned really quickly that we need to choose the niche and stick with that. So, and after that, after we learned the lesson really well, we stuck with that. And I say that it's definitely brought us dividends. You have to just specialize in one thing and don't um, and yeah, just don't try what you don't know if you are not in a business for a very long time. So and I think that's that's one of the things that definitely made us stronger and better. And again, we are not the biggest, but I bet that our deals, the ones we're looking at and we are purchasing, are probably one of the best in the market. And I just know that because I look at the deals all day, every day, and I see them in in packs. And I'm just really proud to say that we're really picking our deals very, very carefully. And in terms of reporting, and I think that is one of the reasons why we're not really looking for investors. We just keep the existing ones from deal to deal. I think that is probably our our strength. That's why I can say that we clearly bring in value to our investors, because they choose to stay with us from deal to deal. And talking about clarity, transparency, well, we went as far as creating our own deal management platform, where we showcase on monthly basis how our investors money perform versus actual versus projected. So they can see every single month very clearly how it's faring out. They get reports in the portal every month. They can see projections and performance. And yeah, so I think that is absolutely one of the strongest values of our group is transparency, and just doing what we do best, and just being careful and learning the business. What is the rush? You really have to just learn your lessons, and we plan to be around for a while, so there is no rush to make silly mistakes. Again, not in the number of units, but rather how profitable your investments and investors are. I think that is of greater value.
Awesome. Great. Thank you, Ekaterina. And something I'll say, I'll talk about hedge funds a bit, because no one's in hedge funds in this panel. But something, we had a hedge funds panel just a few months ago, and some of the youngest managers in hedge funds were actually some of the most creative and getting some of the most exciting returns. And then, as the hedge funds got older, they're resting on their laurels a little bit. It's just that trade-off, that really bringing that great experience, but also if you take a chance on a younger alternatives manager, you're getting on the ground floor. You're going to be growing with them and maybe some of the most exciting growth of their company and their investment firm.
Did you say that old guys can't keep up with the young guys? Is that what I heard you say?
I didn't want to say it in that blatantly, Troy, that great experience that you got, 35 years. I just found that fact very interesting, that some of the hedge fund guys tend to sit around after 7 years. But you know what happens is the hedge funds get shaken up, they break up, they make new partnerships, they partner with new one, and that kind of hits the juice with everyone. And the smart people keep their next opportunity going.
Well, Brendan, can I just mention something real quick?
Sure.
Well, I think that is a great point of making it fresh, making it creative. I just really enjoy this industry and this niche, not just because this is so stable and it provides great returns and whatnot, but I find this to be, each community is so different, and it's like a little, we invest in a different location. So it's truly, every property presents its own set of different puzzles to solve. So I find it a very creative process, actually, to solving these puzzles in different places of of our country here. So I think it's very creative, and you want probably to invest with people who just find this whatever they do to be very exciting, and to be very just rewarding. I guess that's what they would want to do for free if they had to.
Yeah, and that expert, I think everyone, getting into their niche and really become an expert in it. You'll see a lot of alts people segment off and become real experts in their field. And you can kind of jump on that experience, whether jumping on at the beginning or as someone's done quite a few deals under their belt. So one last question here. I know we're closing in on an hour, so I want to get people back to their evenings. I'm from Rocket Dollar. We're a self-directed IRA provider, just plugging ourselves. And what we've really tried to do is we tried to make this feel a lot cheaper and easier to do for people. So I'd like to ask the panel, plenty of people might have done, stocks and bonds in their taxable accounts and also in their retirement accounts. And in a retirement account, there is no capital gains tax. You don't get to write things off like you do in some parts of real estate or energy or other investments. However, there's no capital gains tax. So how do you feel, having your assets into a retirement account? How does that, sound to a certain type of investor, whether they've done a deal in a retirement account or not. So Ekaterina, we'll have you start off first.
Yeah. Well, Brendan, we love this. It does fantastic. We do it in every deal. I borrowed from someone's 401k for a deal, so we definitely use it in all different ways, and I see no reason why people would refrain from doing that. That's definitely has plenty of benefits, and I think people just need to get really educated on how to do it properly with the company they trust, and absolutely do that. So yeah, we do it. I do it. All our investors do it.
When we have an issuer come to us, if there's 30 investors, sometimes we'll have usually around 5. It varies from company to company, issuer to issuer. Usually around 5 or some interested in doing money in time account or have done it before and kind of exploring it for that current deal. Alina, love to hear your experience working with retirement investors in real estate.
Brendan, I'm sorry, did you ask me?
Yes, Alina, I'd just love to hear, have you ever worked with retirement investors at your firm or just in real estate in general?
Sure. So I'll answer to your question with a story. I was talking to one of my existing investors. He invested with me in 2 deals, and then we had the next project come up, and he reviewed the project, and he called me, and he goes, it looks like a really great opportunity, but I just ran out of money. I don't know what else to do. So we started exploring, and one of the things I tell my investors, or rather I ask my investors first before they become my investors, is whether they have an emergency fund set up. And I always tell them, if you don't have emergency fund, I cannot take you on as my investor. Emergency fund is the money that you set aside and you do not touch unless it's absolute emergency. It is not for investments. It's definitely not for investments in alternatives, or at least not in commercial real estate that's less liquid than Wall Street. So, we've talked about that, and he had emergency fund set up, but then I asked him about self-directed, and he was puzzled. He's like, what do you mean self-directed? He never heard of that term. So I took him through my personal journey as how I explored self-directed and how I had a self-directed IRA, and how later I started my own company. So I opened a solo 401k for myself. And he was so thrilled that I mentioned that. He said, yes, of course, he has the money that he rolled over from one of his past employers, and it is sitting in one of the investment banks, invested in Wall Street, and he can definitely manage to pull out some of the funds and start investing by opening up self-directed account. And stories like this exist left and right. People, again, have no clue that there is an opportunity to take their IRA money and self-direct them into something else. And everything just sits in the Wall Street. And so when I mention it to at least the folks I talk to and my current investors, they're thrilled to know. I obviously encourage everyone to take the time to educate themselves, to understand how self-directed accounts work, and that there are different types of self-directed. They can have a checkbook IRA, or they can have a regular self-directed IRA with a custodian. So I want them to decide whether, number one, it is the right account type for them, and number two, decide what type of the account they want to open and with which custodian. So absolutely, having custodians like Rock and Dollar to work with has opened up a ton of opportunities for us and our investors, and having it available online as a tool where people just can go online, register, create account, and do the account management virtually has helped tremendously to smooth the process and to open up a lot more investment opportunities for our investors in the alternative space.
Great. Thank you, Alina. And I'll keep moving quickly because I know we're going to finish up soon here. But something that we've heard is just, you're running out of cash and you have a deal you really want to do. You're really excited about it. So we've often at Rocket Dollar been able to help people just get a little bit more movable capital. A lot of Americans just have an old retirement account sitting around that they haven't checked in years. They weren't exactly happy about the results or what it's in, but now we get to help them move that. And often this is a thing, not people don't really brag about it if they haven't had a great experience. And why the founders created Rocket Dollar, I moved down here from Chicago to Texas to join this job, is the experience was pretty expensive and it was kind of hard to do. And people were faxing things around just as recently as a year or two ago. So we said, hey, let's just make this cheaper, easier to do, $360, $15 a month. And let's also make it more accessible with technology. So Troy, I'd love to hear about your experience with your investors and them using retirement funds.
Well, we're out of time, so I'm going to make my answers short like my normal personality. Number one, last year, over 60% of our business came through self-directed IRAs. Last year, we had a record year. In 35 years, we had more business last year than we've ever had. We picked up and doubled our client base, and it was all attributed to Rocket Dollar and the other custodians we've worked with, all coming out of self-directed IRAs. It was a combination of two things. It was education and working with the right professionals, Brendan, like your company, and helping people understand they have to actively, proactively look at their retirement accounts, because I'm exactly like you described. I set up my first self-directed IRA like in 1991. That's right, 30 years ago. I'm an old codger. I did it long before when you had fax machines and you didn't have anything but pagers. So there was no cell phone. So I've done it because I had older investors who were frontier who said that's the way to really build your portfolio, is to have alternative investments inside of your IRA, inside of your self-directed IRA, that allows you to really grow it significantly and maybe not be tied directly to the public equity. So I've had one for 30 years. But at the same time, it's a different market today than it was when I started, because now you have so many more products like mobile home parks and multifamily and different currencies, and you have minerals and oil and gas. So the thing that's really important is that it's amazing to me how many people have money in retirement accounts who do nothing but let it sit there, and they don't even know what it looks like or the account. And now I don't think you can be passive anymore. It's too fast a pace in the markets. If you're not proactively managing it, you're either losing money or you're losing opportunities. But either way, you're not maximizing the value of your net worth or your portfolio. So my suggestion is tonight, for those that are listening in, is one, take the weekend, pull out all your accounts, look at your retirement accounts and decide, hey, I've got money I'm not putting to work. Let's open an account with Rocket Dollar. Let's get started. Let's find out what investments in the alternative space are available, because at the end of the day, it is your action that's going to create the greatest safety to your net worth. That's my closing statement.
Thank you so much, Troy. We're going to close things up. Thank you, Troy. Thank you, Alina. Thank you, Ekaterina. Thank you, everyone, for tuning in with us. I really hope this helped you guys navigate the alternative space, helped you get maybe more interested or just a bit more clarity of an asset that you're looking at, how to get in that right mindset. So we're going to have Tyler and Troy, they're going to send out a recording for all of this. We're probably going to upload this to the Rocket Dollar YouTube channel as well. So if you're tuning in late, or if you watch this, feel free to share this as well. So thank you, everyone. Have a great evening.
Thanks, everybody.
Thank you very much.
Bye.
Carl, if you're still on, I am just giving you a quick answer to your question. Thank you, everyone.